Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by David Boren, and we're bringing you two red-hot number one stocks in completely different areas. I'm going to start with my stock. It's Estee Lauder, ticker EL. Yes, it's on the beauty side, prestige cosmetics. What's making it so hot? Well, we can't really wear makeup right now, but we can wear skincare and fragrance. And those areas are breaking out. And on the reopen, a lot of things are going to change. We're going to see a much more makeup use. So makeup should soar again, but I don't think we're going to get rid of our skincare. And they've got a couple really hot prestige brands that are really just dominating on the skincare side, including their own Estee Lauder brands, but also Clinique and La Mer. Anyone who has ever tried La Mer knows the lure of it. And it's not cheap if you also have tried to buy it. So these are some areas that Estee Lauder is really just great at and really has no competition with worldwide. It is a global company. It has big sales in China, and the Chinese reopening after the COVID pandemic has really boosted their sales. They're back to being year-over-year sales growth already earlier than they projected. But let's take a look at those earnings estimates and see what's really supposed to be happening here in 21 and going forward in 2022. So here are the sales and earnings estimates for Estee Lauder off of Zacks.com. And you can see here they're on the fiscal year. So this year they're about to report quarter three coming up here in May. And you can see sales, very nice, almost 11% growth on the year here, but they're expecting up to almost 16% for just this quarter. That's pretty hot. But also remember, this quarter will be lapping the year-over-year COVID shutdown. So they're going to be easier comps in this particular quarter, especially for any kind of retail and this kind of retailer, because last year everything was basically shut down. Nobody's really buying anything. So everything year over year is going to look pretty good. And that's the same thing here with the earnings. We're going to see this 44% jump here for the year now, 48% for just this quarter. See this next quarter here, so huge because a year ago for the fourth quarter, they took a loss of 53 cents. And so those are going to be easier comps to overlap. But still, going here into next fiscal year, which will start in the middle of this summer, still another 15% on earnings growth. And we have another double digits up here for next fiscal year on sales with 11%. Now, Estee Lauder is not cheap. I'm not gonna kid you on that. What's going on? Yes, we have the earnings growth, as you can see in this chart, showing the big rebound after the pandemic hit. Everything was crushed down. It is slowly rebounding, not as high as what the analysts would have expected if there was no pandemic, but slowly going back there. But you can see the shares. Let's take a different look at the shares here with the 3-year chart busting out. This is new highs, and they've been among the hotter stocks out there. Now, they have basically decided to tread water here, waiting for some kind of catalyst here in 2021. But that hasn't given you much relief off the cheapness factor or the expensiveness of it. They are trading at 49 times with a PEG of 4.6. So very pricey here, but I am expecting that earnings growth to continue here moving into next year, and they still remain the champion of global skincare worldwide. Their China sales, even on opportunities like Tmall, they're the number one brand on Tmall. And once you get Europe reopening again after this latest shutdown, probably over the summer, you're going to see the European sales really start driving higher, as well as North America. And they have the brands. They have the Clinique, the La Mer, Estee Lauder's own brands in fragrance. Tom Ford Beauty blew it out. And they did see 5% growth in sales in the second quarter in fragrance. So they have the complete package, including hair care. And if you're looking for a beauty play and you're looking for basically what is also a reopening play, at least on the makeup side, then Estee Lauder is the one to watch. Now I'm going to throw it over to my colleague, David Boren, for his number one pick.
Good morning. I'm Dave Boren, stock strategist for Zacks Investment Research. And my top stock pick this week is really a layup. It's in the infrastructure section. And obviously, there's been a lot of talk about infrastructure lately. President Biden unveiled a plan of a little over $2 trillion last week to shore up the nation's infrastructure while also providing a big fiscal boost to the U.S. economy. If you've been reading the news about this or watching the news, you've seen that the debate has really been that the plan includes a lot of things that aren't traditionally infrastructure. So there's about $620 billion is for the things that are no doubt what we had always called infrastructure: roads, bridges, airports, ports, things like that. There's about another $100 billion for water projects, another 100 on the electric grid, and a little over $200 billion for affordable housing projects. And then the rest gets into things like internet access, jobs trainings programs, child care, a lot of things that are being criticized by some opponents as not infrastructure. And you know what, I'm not here to make that debate either way. What I do know is that about $1 trillion of it, roughly half, is on traditional infrastructure projects. So, and that's going to get bipartisan support, right? If this gets whittled down to a more bare bones proposal, the things that are going to stay in are the roads, bridges, airports kind of things. Now, United States Concrete is typically a fairly boring and unglamorous company. It's not the kind of thing we tend to talk about. But it's funny how about $1 trillion of government spending can make something that's really unglamorous and boring really pretty spectacular in a hurry. U.S. Concrete sells ready-mix concrete for the commercial market, aggregate stones, basically all of the concrete building materials, the crushed stone, gravel, sand that underlie roads and buildings and get turned into concrete. They have about a $1.3 to $1.5 billion in revenue every year. It's steady, it grows modestly, but it's a very price competitive industry. And because they're delivering a physical commodity, there's some limit to the idea that they can have a huge upside surprise. It's hard to just suddenly deliver a huge multiple of the amount of concrete or building products that you used to deliver. So the last 4 earnings reports were all modest beats. The earnings are just like the revenues, steady, somewhat unspectacular, but I think they might be about to get spectacular. So when we think about the sheer scale of the infrastructure bill, assuming that $1 trillion gets spent, that means that if 0.1% of that infrastructure spending gets spent on U.S. concrete products, which is a pretty conservative estimate, that's going to nearly double what they make annually in revenue in a year. So that's a pretty significant increase. This company doesn't get a ton of analyst coverage, being, again, previously kind of boring, but we've seen the estimates for 2021 and 2022 ticking up pretty significantly as people come around to the idea that infrastructure is going to be one of the more exciting industries as opposed to one of the more boring industries. So however you feel about the infrastructure bill, however you feel about government spending, this is an opportunity for you as an investor to put your chips on the table with a company that stands to make a lot of extra money, a huge increase in revenues and potentially earnings from the new infrastructure bill. And that's what makes U.S. Concrete my top stock pick of the week.